Good morning. I'm Joe Clark, managing partner in the Financial Enhancement Group. Happy to have you along. Well, it's obviously summer. You can see from the glare of my face coming on the window. It looks like May is brought in summer. I hope this stays for well. Hope you had a great week. Lots to talk about. If you're new to the Market Carver, very simply, we're going to try to run you through things that come through our allocation meeting. As I say on my radio show, try to give you things that you need to consider, not just headlines, but give you an understanding of really what's going on. We do that in the lens of acting as fiduciaries. In other words, we treat other people's money as if it were our own. We truly manage the money internally. We don't ship it out to mutual fund managers or other entities. And we're going to do that in the lens of smart, tax-savvy investment strategies. So we're going to move to the technical leg this week. We have 4 legs that we look at. We look at different legs on the Market Carver each week. For the clients, obviously, they get an update of each leg. We just try to give you a brief overview. The technicals is one of those legs. The theory is very simple. There are 4 ways that a stock can be supported in this market. If it has at least 3 of those legs, we think it's pretty strong. If it falls to 2, it's time to let it go. On the technical leg, you need to know we had another flash crash last week. I talked in our recent Thirdlies. Those are group meetings that we have for our clients. We buy dinner a couple times a year. We had a couple hundred families out between Lafayette and Anderson to visit us this last few weeks for dinner. And we talked about the flash crash May 6th of 2010. Well, this one was a little bit different. It was over a Twitter feed. Came out and said, hey, the White House is under attack. President's been hurt. And you can see on the chart the amount of drop in the Dow, how quickly it happened. More importantly, the amount of volume erosion, the trades that were taking place. Social media is making this even more difficult for individuals to respond because you got to be able to move quickly when something like this crazy starts to happen. And you needed to have somebody who can work in a tax-efficient environment, who knows you individually in terms of what it is they need to do. Your key question to ask people in the relationships you have is, are you allowed to have discretion to act on my behalf? There are a lot of people who will serve as a fiduciary, who will do their best to treat your money as if it were their own. But you need to ask if they're capable of taking on discretion to make decisions when things like that happen. I've been talking to people about exchange-traded funds for years. We have a lens that we look at when it comes to fiduciary work, where we want to watch out for risk and volatility, fees and expenses, taxes both today and tomorrow. Last but not least, we want to pay attention to making sure that we get a real return. It's something above 0 plus inflation. Exchange-traded funds have really put the kibosh to mutual funds in terms of fees and expenses over the years. In fact, quietly, while we've been around, the largest holder of exchange-traded funds is actually mutual funds inside of the mutual funds because they're so easy to trade, so easy to position a portfolio. Well, some of the bigger boys are starting to realize that the news is out, that their mutual fund industry is under attack, and they're moving quickly to form exchange-traded funds that are cheaper than what we have today. In some cases, perhaps even a little more flexible. That's good for us. We don't mind competing with people on the fee and expense side. Our job is to take the best care of our clients' money that we possibly can. And if they give us something good to use for that, by golly, we are going to follow suit. The fundamental leg, or the institutional leg really, is really critical. It pays attention to the things that are going on in the story leg. And you've got a story of a bunch of fundamental of institutional news all coming together that's not boding real well for the market. We had durable orders down last week. We had a weak ISM number today. Anything above 50 actually shows growth. 50.7 is not a lot of growth. Australia, by the way, down around 36. Really not good. The ADP jobs numbers didn't bode well. Friday could be very interesting. Stay tuned. But everything that we see is a story of weakness, even though the market continues to work its way up. Very interesting times. Be careful out there. As you are being approached, and Lord knows it's happening a lot, we work with a lot of banks. We're seeing a lot of people being offered products that sound safe, secure, make your bellies feel warm and fuzzy, especially in these volatile times. If somebody approaches you to buy a product, understand that we're a fee-based financial planning firm. I don't mind using products when they fit, but far less than 10% of our revenue last year came from any products at all. We get paid to do financial planning and to manage assets. So if somebody's trying to sell you a product, and you want a second opinion, don't hesitate to give us a call. We're happy to sit down, have a chat with you, make sure that it fits you and your financial vision, and that you understand the good, the bad, and perhaps the ugly that come out of that product. Happy to do that for you. Saturday morning, if you're out and about, don't forget to catch our radio show, WQME 9 to 10. Sunday mornings, 10 to 11 on Shine 99, and you can always find our newspaper column and more things like this on our website at yourlifeafterwork.com. Hope you have an outstanding week. If there's anything the Financial Enhancement Group can do to be of service, please don't hesitate to let us know. God bless. Have a great week. We'll see you again soon.